Good morning, everyone. You are watching live Daily Market Outlook for Tuesday, 5th of June 2012, prepared by Windsor Brokers. Still positive tone that has been established on a bounce from last Friday's, after last Friday's negative US data. Still stays in play, though some movements lower seen on the major currencies after opening of Eurozone European session, see some corrective action of the recent rebound of the single currency sterling, while gold is still in the sort of consolidative mode, as long as it's holding above 1600, following last Friday's sharp rally that hit 1630 zone so far. The G7 meeting that is due today is still giving some hopes of possible stronger recovery of the Eurozone economies, as finance chiefs of the G7 leading industrialized powers will hold emergency talks on Eurozone debt crisis today, in a sign of heightened global alarm about the threat posed by strains inside the 17-nation monetary union. With the Greece, Ireland and Portugal all under international bailout programs, financial markets are anxious about the risks from Spanish banking crisis, and the threat a Greek election on June 17 could lead Athens to leave the single currency and participate yet more economic turbulence. Just to say that the Spanish PMI services index that was released this morning came in further disappointing levels. 41.8 was the release for May, compared to 42.1 in April, showing that the Spanish economy is spiraling towards the downside, and this is another bad signal for the current situation. Further from the G7 meeting, also in a sign of increasing concerns about the euro area's debt crisis, Australia's central bank cut interest rates overnight by 25 basis points, hitting the level of 3.5%, the lowest basically rate in 2 years. And it said that further weakening in Europe and deterioration in market sentiment might be triggered for a further easing. So far we have seen a 0.25% lower. That actually boosted the Australian dollar that hit a sessions high at 98.01 so far. Currently the Aussie dollar is in the near-term defensive mode. The pressure is in a sign of increasing, the pressure is building in particular on Germany, the European Union's paymaster, to back away from its prescription of fiscal austerity for the region's weaker economies and to work harder on fostering short-term growth. The source from G7 familiar with this matter, likely to be held late in the Asian night, said the group would urge more progress at an EU summit on June 28 and 29, though this alone would probably disappoint global markets. As mentioned in our yesterday's session, the ideas of Germany, that is actually from the very beginning of the crisis, is a more fiscal discipline, and the union actually to create one government that will control the finances of the all members, that most of the members are strongly opposing, as this is also loss of sovereignty. So currently we have the situation as it is, with still no signs of any workable agreement that will prevent Eurozone from further sliding. From the other side, also biggest world economies such as China and the US, as we mentioned yesterday, are showing further signs of weakening, and US especially, that had some hopes for a stronger recovery based on some positive tones. The release of jobs data last Friday actually dampened everything, and they showed basically that U.S. is again in the negative area and moving towards the downside. So some action must be seen, according to President Obama on his yesterday's speech, when he said that some stronger measurements and actions must be taken in order to prevent further sliding of the economy. A brief look at today's calendar. As UK is still out of the markets due to bank holiday, today I think is the last day, and what we mentioned that Bank of Australia cut the rates to 3.5 as expected from 3.75. From Eurozone, in approximately 40 minutes, we'll have the final services PMI for May. That is for now expected to stay at the same level in April at 46.5. 1 hour later at 9 GMT, Eurozone retail sales for April are expected to be weaker than the March's release. That was 0.3%. Today's consensus is minus 0.10%. 10 o'clock GMT's German factory orders for April also expected to decrease from 2.2% of March to minus 0.1%. That is forecast for today. Across the ocean, Canada starts at 12:30 with the building permits for April. Significant decrease is seen in this indicator from 4.7% of release of March to minus 0.3% now. Bank of Canada is due at 1300 GMT with the overnight rate decision. No changes forecasted. That the rate is expected to stay unchanged at 1%, and at 1400 GMT, US ISM non-manufacturing PMI for May is forecasted to show slight improvement. 53.6 is compared to release of April at 53.5. The PMIs in states actually are still holding above 50. That is quite a good signal for further support of the U.S. economy, while, as we mentioned, the Spanish one at 41.8 and Eurozone and Germany France also are still holding well below 50. That divides contraction from growth, and these are actually the bad signals that are deepening the crisis and increasing fears of further weakening of the Eurozone as the union and the currency bloc. Now we're going to take a look at each instrument separately and see the latest movements. As said, some corrective action seen after opening of European session this morning, as the pair reverses its recent gains from last Friday's fresh low at 122.87 that peaked at 125.41. The good and the positive thing was, as we mentioned yesterday, where the market was around the 124 zone, that we need to see the regain of minimum 125, a level that will be, this is the actually the end of May's corrective consolidative range, brief consolidation range floor, and the previous strong support where the pair actually attempted to build the base, but it failed later on. And the regain of this level actually gave some more positive tone into the pair as the price hit 125.41 high so far with this morning's corrective action and loss of initial support at supports at 125 and 124.70, and now touching next significant level at 124.55. That marks 50%. That marks the previous last Friday's post-intervention, post-data spike high, as well as ascending 55 days exponential moving average. And basically, ideally, the reversal should occur here in order to keep the short near-term bullish structure fully in play for possible further extension higher, as all studies on the hourly chart are weakening and pointing lower. It's still this still shows more space for further easing. It will be dangerous, let's say, and will signal further weakening in case we lose next more significant support at 124.00 and 123.84, where is the higher low of yesterday, as well as 61.8% Fibonacci retracement of the latest up leg from 122.87 to 125.41. So far, the pair moves towards it's attempting through 55 days moving average and attempts through 120 towards 124.54, 38.2% retracement and loss of this initial support 124.50, 40, I would say, would be signal for further easing. Important, as mentioned earlier, 124, 123.84 break below here with the signal an end of the current corrective action, and refocus levels at the downside 123 and 122.87 recent low that might open way for a further extension lower of the broader downtrend from the lower top of 1st of May at 132.82. Situation on the larger time frames is still quite negative. Some signs of recovery are seen as studies started to point higher on the latest bounce. However, this morning's pullbacks and the risk of loss of 124 and 123.84 would be signal of further weakening. The weekly chart that shows basically the longer term downtrend of 2011 peak at 149.38 with studies well in the negative territory sees quite high chances of extension down towards our targets at 121.50 and more significant 120.00 strong round figure and strong psychological support. On the upside, the ability to hold the current gains and to reverse above our strong supports, I would say above 124 would be still very supportive. We'll face initial barrier 125.41 and then more significant 126.23, the end of May consolidative range top, that break of which would allow for some stronger corrective action. And the sterling also is still in the corrective mode, but not much was seen as last Friday's spikes at 154.36 were the highest levels seen after the bounce of 152.67 fresh low posted last Friday, with the near-term price action being rather in the sideways mode in the narrow range, with the top of the range around 154 at 154 zone, with this morning's action lower now threatening the range floor at 153.50-40 zone, loss of which will again risk next very significant support and round figure at 153.00 to confirm the end of the near-term corrective action and open way for a test of 152.67 and a more significant yearly low at 152.33 posted on 13th of January 2012. That was basically our downside target since the pair lost significant supports at 156.00. That was the last one. The current situation sees, in case of a reversal above 153, then we might see some hopes for a fresh gains still alive. Otherwise, it will be a signal of end of near-term corrective action and a revisit of 152.67 and 152.33. The upside, as said, range top at 154.15 and more significant last Friday's peaks at 154.37. That may mark also 38.2% Fibonacci retracement of down move from 157.15 to 152.67. Regain of these levels is required to confirm some positive tone establishing and allow for a stronger correction, as the situation is that current situation actually shows that possibilities of further easing are much higher at this point, as the pair lost its initial bullish momentum and all studies on the near-term charts are pointing lower, as well as daily studies that are deeply in the negative and also oversold territory that were giving some good signals for possible stronger corrective action. So far, the studies turned again lower, and not much was seen of actually a bounce from last Friday's low at 152.67. And as said, unless we see a gain of minimum levels at 154.37, 154.60, the short-term outlook will still keep the downside favored and vulnerable for possible further extension lower. The dollar yen again seems to be losing traction as basically the larger pictures quite a negative tone that maintains the recent down move from 84.17 mid-March yearly high, and the recent break below 200 days moving average that dipped so far to 77.65. 78.65 is the moving average, and 78.00 is round figure support. Keeps the focus more at the downside as daily studies remain weak and firmly in the negative territory, with this loss of 77.65 to open next 77.36 and 77.00 as the recent corrective action of last Friday's spike low at 77.65. We're still holding below the day's high at 78.64. Not much to be expected in the current situation as negative tone continues to dominate, and drive that keeps the upside protected. In case of a regain of 78.64 and another significant barrier at 79.00, we might be seeing some potential for a stronger corrective action. So far, as long as 200 days moving average keeps the upside capped, more likely scenario would be further extension lower as a part of the broader downtrend of the dollar yen from its yearly peak at 84.17. It seems that dollar Swiss found ground at 95.75. This is what I mentioned in our morning technical analysis updates that are in written and distributed to the various financial sites. The ideal scenario actually was seen on the reversal at this level or slightly lower to keep the larger picture bulls in play, as the pair dipped on its recent reversal from last Friday's peak at 97.69, losing some important supports, 96.15 that marks 38.2% retracement, as well as 96.00 as a previous high and round figure support, dipping so far to 95.75. This morning's action showed the pair's price attempting to base at this point, with the recent bounce higher now confirming temporary footstep that was found at 95.75 ahead of next significant 95.67, 50% retracement, and again more significant 61.8%, and the higher low of 28th of May at 95.27. And currently, if the pair continues to head higher and regains minimum 97.00, then we'll be seeing a potential for a further extension and test of a retest of 97.69. That will open way for our next upside target at 98.00 as a round figure resistance. On the downside, as said, the initial support is currently at 95.65, 95.75 a day's low, with strong support zone seen at these levels. Slightly below is 50%, and more significant 95.20 and 95.00 zone, a loss of which would weaken the short-term tone and allow for deeper reversal, and that will bring 94.00 as a figure support, and more significant 93.66 higher low of 21st of May for retest. So far, a reversal attempt from 95.75 keeps the positive, keeps hopes of further extension, but we need to see a regain of minimum 97.00. That will also signal that higher low is establishing at 95.75, and open way for test of 97.69, our recent peak posted last Friday. Yes, hourly studies started to move higher and point higher, approaching their midlines. 97 again of 97.00 is required, I think, to see the break above the midlines and the signal further strength of as a part of the larger uptrend of dollar Swiss. As mentioned in yesterday's session, no big changes from yesterday on the yellow metal, as it still holds in a sideways corrective consolidative mode after hitting fresh high at 1630 zone on its strong rally from 1545 low of last Friday, where the yellow metal skyrocketed and broke above some very significant barriers, 1683, 1583, 1600 and 16 that marked 61.8 retracement. Hit so far 1630 with the current reversal corrective consolidative action so far holding above 1600, the previous stronger resistance now acting as support with 1608 seen so far, the low of yesterday. As said, ability to hold above 1600 level keeps the upside still in focus and maintains the current positive tone established of last Friday's low, and basically on several attempts downside rejections at the critical support zone at 1530, 1520 zone, loss of which would be quite bad for the gold's price action, as this might signal further easing. So far, the retracement of the latest up leg levels, 23.6 initial one so far contained the consolidative action with the dynamic support at 1605 ahead of 1600 and 1597, marking 38.2% retracement of 1545 to 1630 rally. And ideally reversal in case of a further break lower. Ideally reversal should occur at these levels in order to keep the near-term positive tone in play and prevent the yellow metal of revisiting a quite dangerous zone 1545, 1530 and 1520, break above recent peak at 1630 to open the next significant levels at 1671 and 1680, peak of 12th of April 2012. And a quick look at the oil that is currently in the recovery mode, triggered by Euro's corrective bounce higher and the hopes of G7's today's emergency meeting that might come out with some ideas of preventing further destruction, further actually deepening of the crisis in the Eurozone, with the 84 and 90 seen so far. Not much seen of the corrective action, as 20 days exponential moving average on the 4-hour chart still keeps the upside protected ahead of 55 days one at 87.80, along with the lower top at lower high, pardon, at 88.24. I would say a regain of 92 zone would be a good signal for some stronger recovery. Until then, the prevailing stronger downtrend of latest lower top at 106.41 that dipped so far to 81.19 would keep the downside very vulnerable, and the possible test of 80.00 would be imminent. This is our next significant level, round figure support that will open way towards the next static supports at 75.70 and 75.00. That will basically revisit of these levels would mark the full retracement of the rally from 74.94 2nd of October 2011 low to 110.53 end of February peak of 2012. I would like to thank you all for being with us. That was all for today. We will be updating our technical analysis for the majors and the commodities during the day. There will be another update, and Everything you can find in YouTube in our page called Windsor Brokers Forex. Our next regular session, live session, is tomorrow at the same time at 7:00 GMT. In case of any further movements in the markets, we will be updating it, and you can find all the updates in the Windsor Brokers Forex in YouTube. I wish you a nice day and very successful trading. Good luck.